Vitale here with Vitale Wealth Management with this week's graded investment market update. All information is gathered as of the week, August 10th, 2026. Hope everything's going great for you so far. This week we are at Wednesday and we're going to talk about what's going on. So the week in review, major U.S. indexes had a strong week. The S&P was up 3.5%, Dow Jones 2.96%, and NASDAQ 5.19%. Strong week for growth stocks with the Russell 1000 gaining 5.35 versus its value counterpart, which is a Russell 1000 value, which is at 2.33 for the week. International developed markets which is the EFA, gained 2.26%, while the emerging markets fell 0.42%. Treasury yields fell slightly for the week after hitting 4.75% in the prior week. Now, there continues to be uncertainty around the Federal Reserve's actions, which have generally pushed toward bond yields higher across the curve. Continued escalation in the Middle East and further oil shipping disruptions in the Strait of Hormuz and the Red Sea pushed oil prices higher. Again, we're seeing them at it was over $90 a barrel, but now it's back down to right around 82 again. So we are pulling back in them. We're still seeing gas prices at the pump, which are high. So you wonder, why is the market still going? The earnings drive the market, and the corporate earnings have been amazing. So have the AI earnings. Let's talk about upcoming economic releases. Last week received an update on the labor market, which the unemployment rate coming in below expectations. Economy lost more jobs than expected. We also received an update on the inflation number, the CPI, which was released on Wednesday, and the wholesale producer price index, the PPI, reported on Thursday. And I misspoke. Today is Thursday, not Wednesday. And the PPI numbers came out today better than expected. So did the CPI numbers. Both came out better than expected, which is why we had a big increase in the market today. Inflationary pressures are expected to ease slightly from the prior month because of the CPI and PPI. Then on Friday, we're going to go look at consumer spending with retail sales, which is expected to slow slightly from the prior month as expected. But we are seeing a lot of still things. Everybody's worried about the rate hike, but if we can still see this cooling, the softening of the inflation number, it's going to be good so we don't get one. Markets performed well last week despite ongoing uncertainty around the talks between the U.S. and Iran. Control over the Strait of Hormuz is likely to remain a source of volatility in the commodity markets, as we are seeing, and volatility could spill over the equities in the weeks ahead. A lot of uncertainty. That being said, the earnings season continues to demonstrate the underlying strength and resilience of the U.S. corporations, reinforcing the durability of the broader AI investment theme. Hyperscalers have raised their capital expenditures guidance, directing increased spending toward data center build-out and AI-related research and development. So there's a lot of money getting out there, a lot of spending that needs to happen. There's a lot of investments in the AI infrastructure. This sustained investment has begun to flow beyond the technology sector into other industries, a dynamic that should support broadening of market participation as additional companies benefit from the associated tailwinds. So everything is moving still full steam ahead in that. Now, talk about the recent trade activity. As you know, Gradient every quarter has to rebalance portfolios unless they have to do it quicker because of something else. There was trade in the GTR portfolio last week. GTR has been usually pretty good, but it's been lagging the last few years, but it's actually been doing much better this year. The monthly signals switched from the U.S. high beta to the emerging market index, and the portfolio was traded and will remain invested in emerging markets for the month of August. Also, let's talk about some of the stocks in the news. ALL, which is Allstate Corp, that is owned in the G50 portfolio, reported second quarter earnings with adjustments, net income rising by 51.3% year over year. Operating revenue up 4.5% year over year, and shares rose slightly 1.1% for the week. Also, how about McDonald's? McDonald's is in the Core Select as well as in the G50. Reported mixed results with system-wide sales increasing 4%. However, U.S. sales were only 0.8%, and shares were up slightly on the week by 1.4%. As you see McDonald's and as you see a lot of these companies in the G50, we talk about value, we talk about big companies. We're not looking for huge growth, but we're looking at slow and steady wins a race in some of these portfolios. And that's what's so good about retirement. They don't move really big, but they give you consistent great growth and great dividends. So there's a lot of strategies out there right now. We still think the market's going to keep going. We got a lot of legs underneath it. There's a lot of earnings, and the earnings are looking really good. Inflation numbers are still checking in pretty good. If we can get all this nonsense handled in the straight and a deal there one way or another, things are going to be a lot better. But that is hurting things, as you know, right now. That's it for this week. Thank you so much for being part of the Vitale Wealth family. If you need to get a hold of us, give us a call. 855-756-5700. Visit us at vitalewealth.com. God bless you, and we'll see you again next week.